Today's Talk About It Tuesday question is, what are the advantages and disadvantages of a health savings account? Well, let's start there because I know most people have probably never heard of a health savings account. So what is a health savings account? It is an account that is designed specifically to cover out-of-pocket medical expenses, qualified out-of-pocket medical expenses. And what are qualified out-of-pocket medical expenses? Definitely not the premium, so you can't pay your monthly premiums from it, but any deductibles that you might incur if you use, a medical service, vision, dental, psychiatric, a lot of things that are not covered by a traditional health insurance plan. So who qualifies? Anybody who has what you call low premium, right? So it's low cost up front, high deductible health insurance plan qualifies. And so if you enroll in one of those types of health plans, they usually would offer that to you. But banks have them, credit unions have them. If you ask for them, they'll say, yes, we have a health savings account. So why would you use a health savings account? So some of the advantages, let's talk about the advantages. You use pre-tax dollars to fund the account. So if you have that type of plan, your employer would not take taxes. They would put it into your account pre-taxed. If you made a contribution with after-tax money, it is tax deductible. So you get the advantage of pre-tax money. So now, if you think about saving money in terms of healthcare, you're already paying a low premium, and then you're paying the out-of-pocket expenses with pre-tax money or money that you get to deduct if it's already post-tax money. So there is an advantage, a tax advantage there. You also get to roll over whatever you don't use to consecutive years. So if you didn't use the amount that you put in, and there's a cap, by the way, I believe it's $38.50 for individuals and $77.50 for a family plan a year that you can contribute. So it's not like you can contribute, $100,000 or $50,000 or 20, whatever. There is an annual cap, but whatever you don't use rolls over, still tax free. And you can contribute to it. Your employer can contribute to it. Family can contribute to it. So it's not like you're stuck. You can also be gifted that money from relatives and so forth. So you also gain interest on the account. However, the interest is usually less than 0.1%. Tax advantage, that interest does not get taxed, but it's only less than 0.1% on average. You do have the option of taking the money that you don't use and inside of the account investing in stocks, bonds, and things like that, but you run the risk of losing that money inside of that if you do that. So what are the disadvantages? You can only use that money for qualified medical expenses. If you use it for anything else, or if you try to withdraw it before the age of 65, then not only do you get taxed on that money, you also pay a 20% penalty. So if we look at it in its totality, if you are a disciplined person, then you could set aside money in an emergency fund, right? Or you can call it a medical fund and just have a high interest savings account. There are high interest savings accounts online now that are paying 4.5%, 5.5% interest annually. You can take the money out, use it for whatever you want at another time. There's no penalty for withdrawing it. So I don't see why you think there's this great, unless you just pay ridiculous amounts of taxes, I don't see really a big advantage for most people to tie that money up until they're 65 years old if they don't use it, with the threat of not only being taxed but also a 20% penalty, when you can put money aside on your own, and it can be, obviously it's post-tax money, but the interest rate on it that you can potentially get is far more significant. So I think it would make up for the difference of whatever you would pay on the taxes. Um, so you can weigh the pros and cons. Like I said, pros, pre-tax money or tax deductible if it's post-tax money. It can earn interest. I don't really see too many great advantages of it, but it does exist. It is a tool. You might find it useful. I love the question. I'd love to hear your thoughts on it. Would you prefer to do that, or would you prefer to just put some money on the side that you commit to your medical care in something that's generating a much greater return over the long period of time? So, again, love to hear your comments, your suggestions. Please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.